Okay, so chapter 3 is recording transactions and the multi-column journal. We're going to define what a journal is and explain why it is used to record transactions. We're going to compare and contrast different types of source documents and identify the 4 parts of a journal entry. A journal is a form for recording transactions in chronological order. And journalizing would be recording transactions in a journal. This is what your multi-column journal looks like. Okay, we have special amount columns over to the right, the cash, debit, credit, sales credit. Oops, go back. And then we have the general debit and credit. And then we have information over here that we need to put down for each transaction. Okay. The multi-column journal, it is used for accuracy, making sure that everything is accounted for. It is in chronological order. What does that mean? Chronological order. What? Time, first to last. The order it happened. Okay, so by date. Okay, so it's in order by date. Double entry accounting uses this, which is what we're doing here. An entry in the journal, it's information for each transaction recorded in the journal. It's called an entry. And then double entry accounting is recording of debit and credit parts of a transaction. Okay, we've been doing that. We've been separating everything into debit and credit parts. Now we're going to put it into a journal instead of just breaking it up into a T account. Okay, our source documents. It is a business paper from which information is obtained for the journal entry. Have to get our information from somewhere, right? There are several different types of source documents, one being a check. Okay, and it is a business form ordering a bank to pay cash from a bank account. This is a check and a check stub here. Also have invoices. It's a form describing the goods or services sold, the quantity, the price, and the terms of sale. Okay, so this, for instance, is selling to Main Street Services for website design, $500. Sales invoice is an invoice used as a source document for recording a sale on account. It's also referred to as a sales ticket or a sales slip. And then a receipt is a business form giving written acknowledgement for cash received. A memorandum or a memo, probably heard that more than memorandum, is a form on which a brief message is written to describe a transaction. Also a calculator tape. Okay, it's very basic, but it's still a form of a source for a sale. Okay, so we have received cash from owner as an investment. $2,000 on January 2nd, receipt number 1. Okay, first of all, this is what we did before, right? We broke it down into their different accounts. So we have cash increasing, capital account increasing. Now we're going to put it down into the journal. Okay, so the first thing you start with is the date in the date column. Okay, and the very first time you put the date on a journal, you have to put the month and the year. So over in there it says January or Jan, so abbreviated. Right up above there it says 20 dash dash. That's where you would put the year. And then the next number is the second. Then you would write the debit amount in the cash debit column. The credit amount in the general credit column, and then write the account title. So it goes in the credit column of the general credit, and then the account title will be Michael Delgado Capital. And then the last thing you write down is the source document number in the document number column. Okay, so in this case it was a receipt, so we're going to use the abbreviation R1. Next transaction is paid cash for supplies, $165, January 2nd, check number 1. We have supplies increasing, cash decreasing. Okay, so on the journal it would look like this. Now this is the second transaction in the journal, so you don't have to repeat the January. You just have to put the day. So it's the second. The debit amount goes in general debit, and then the account title is supplies. And then the credit amount will be cash credit, and then the document number for the source document was check 1 or C1. So in what order are transactions recorded in a journal? Talked about that at the beginning, Logan. Chronological order by date. And why are source documents important? Can answer? Anybody besides Logan know the answer? Why do we need to use source documents? Why are those important? Tell me what you got, Logan.
They're proof that it happened, but only when they tell you what kind of transaction it was.
Okay. Okay, so it's a way to verify the accuracy of the information that you recorded or you're going to record in the journal. And so you have proof of what happened. List the four parts of a journal entry. What do you list first?
Your date.
Your date. Okay, and then what? Corbin? Which goes, well, maybe or maybe not.
Source document.
Nope, that's the last. Anna. The debit amount, or the debit amount, where it goes. And then, Josh,
The
credit amount, and then, lastly, source document. And the account title. The account title goes along with where it goes. And if it's in the general column, it's going to go, if that account title is in general debit or credit, it's going to go in the account title. You will never put cash in the account title. You'll never put sales in the account title. Not sure of any others right now.